Berkshire Hathaway Incorporated, March 12, 1969. The stockholders of Berkshire Hathaway Incorporated, earnings in both textile and insurance operations improved somewhat during 1968. Total operating earnings in relation to stockholders' investments still are not satisfactory, but we are expending every effort to bring them to the proper level. Textile operations. Sales volume increased about 14% with good gains in both home fabrics and menswear linings. Over the years, these have been our most consistently profitable areas, and their improvement in 1968 reflects strong efforts by Richard Bowen in home fabrics and Ralph Rigby in menswear linings. The home fabrics division in 1969 will utilize new 150-inch solar looms, offering opportunities for expanding our style line. We hold options on additional looms, enabling expansion if profitable projections materialize. Our box loom division continued to present severe operating problems as it has over many years. Our history in this area shows occasional periods of strong prices, regularly followed by heavy imports of goods, severe price cutting, and curtailed operations. As a result of a careful survey of the future market for box loom, gray goods, and the investment required to service this market, it was decided to phase out our operations of such gray goods during 1969. After the transitional operating period has been completed and some loss has been sustained on the sale of fixed assets, we expect an improved overall textile operating situation. Insurance operations. National Indemnity Company and National Fire and Marine Insurance Company continued their splendid operating performance under Jack Ringwalt. Premium volume increased only slightly in 1968, but more importantly, a good underwriting profit was again produced during a period when the property insurance industry operated at an underwriting loss. Investment income increased substantially in 1968, reflecting both a greater base of assets and higher yields on fixed income securities. Some capital gains again developed from our investment in common stocks. The insurance companies continue to seek new areas for expansion, both at the direct level and possible in the reinsurance field. The emphasis continues, however, to be on the underwriting of profit rather than volume simply for the sake of size. Due to our policy of retaining all earnings in the insurance subsidiaries, we have substantially augmented their capital funds, increasing our ability to retain greater segments of our originated premium volume. Marketable securities and acquisition. During 1968, we sold a portion of our marketable securities portfolio at a profit of approximately $1.5 million after tax. At the end of 1968, we had unrealized market appreciation of $6,400,000 in the balance of the portfolio. Such securities were held in marketable common stocks as a temporary investment, pending the utilization of the funds and acquisition or expansion of operating business consistent with our program for the development of greater and more diversified earning power. Immediately after year-end, we repurchased all of the stock of Sun Newspaper Incorporated and Blacker Printing Company Incorporated, which represents an initial entry into the publishing business. This purchase involved only a small portion of our funds available for acquisition. Sun Newspapers Incorporated publishes 5 weekly newspapers in the Omaha, Nebraska area, with paid circulation of about 50,000. Our related printing business is conducted by Blacker Printing Company Incorporated. This purchase, while small, has potential for future expansion. The operations will continue under the able management of Stanford Lipsey. Kenneth V. Chase, President. Letter written by Warren E. Buffett.